Hello, everyone. Welcome back to Without Boundaries. This is episode 2, and I want to do something very simple. Really, this week, tell you what actually moved in AI, what capital did with it, and why it matters to you, especially if you're running a business, building a product, thinking about investing, basically without the hype. And this week, it felt very dense. Not louder, really, just denser. And that usually happens, to be honest, when there's lots of different conversations collapsing into one thing. And that's really technology, policy, money, and the real world. And of course, the big one this week was Davos, the best example. At Davos this week, AI wasn't a track, actually. It was sitting everywhere, which is very different to previously, kind of alongside geopolitics, trade, robotics, energy, and even money. And that matters because it means AI is, again, not being a specialist topic like it was before and kind of being treated like general purpose infrastructure. You really felt the tone shift. A lot of the leaders weren't asking, what can AI do? They were asking who is accountable when it goes wrong, what happens when things start showing up. I don't know if you saw this, but PwC's chair said most companies are still not seeing measurable benefits from AI. And whether you agree or not, that sentiment kind of explains the mood, which is really, we're over the hill of wonder and now we're into scrutiny. The biggest commercial signal of this week was OpenAI and advertising. And Reuters reported on this a little bit. Basically, of course, you saw OpenAI previously declaring it would never do ads. And now, of course, it's announced ads. This is being priced, by the way, on clicks and not views. And commitments are apparently about $1 million per advertiser. And the same reporter expected that to launch in early Feb. This isn't a moral point, it's a platform point. Ads mean OpenAI is basically treating the assistant as a mass consumer product, and it's something that therefore people are using frequently enough to support an advertising model. Of course, it also introduces incentives into the actual model layer, which means once sponsored content exists that you can no longer assume it's really helpful, and profitable will always kind of be in the same point. And that's why this kind of got immediate pushback and attention, especially, of course, given what was said in the past. Again, Senator Ed Markey actually sent letters this week to OpenAI and a bunch of them as well, asking how they would prevent deceptive or manipulative advertising in chatbots, how they'd protect privacy, and how they'd avoid harms to children. And The Verge actually reports on this, that OpenAI's plan is to test ads while excluding users under 18 and avoiding topics like health and politics. But the broader point still stands. Once ads arrive, regulators and the public will need to interrogate those incentives. You also saw it on the Davos stage. Reports in Davos quoted Demis Habbassis, the Google CEO, calling the move premature and saying that DeepMind has no plans to put ads in Gemini. To be honest, whether that's a permanent stance or a temporary one, the split is now very visible. What that means really is one side is testing ad support assistants, another is trying to protect trust and keep the assistant clean, at least for now. And while we're on OpenAI, another major move this week was safety infrastructure becoming operational. So I don't know if you saw, but OpenAI published its approach to age prediction, and multiple outlets reported on that rollout. So basically, ChatGPT is going to use signals to estimate whether a user is likely under 18 or above. And so it automatically applies extra protections. And apparently in the EU, that's going to happen in the coming weeks due to the regional requirements. So for me, this isn't a small change. This is a signal that consumer AI is moving towards identity, segmentation, and, to be honest, different modes of access depending on age and other things, because the kind of one-size-fits-all assistant doesn't survive with regulators, minors, and those other kind of very high-stake topics. Now, the second capital signal this week, I don't know if you've just seen it, but Humans And. So Humans And raised $480 million in a seed round valued at $4.48 billion. And again, this is one of those very large seeds and unusually high valuation. Of course, this is pre-revenue. The kind of Mira Murati opportunity is resonating here, perhaps. The interesting question is not, is this crazy valuation, which of course most people will say it might be. The interesting question is kind of the future of what investors are funding with that check size. in that space. And kind of looking at the coverage here, for me, this is kind of positioning itself as a human-centric lab, aiming to build tools kind of beyond the next stage of chatbots, etc., and thinking how humans communicate and collaborate, to be honest, alongside a kind of product really for agentic work targeted next year. So this week you had kind of two futures being funded at the same time. You've got this open AI space, monetize the assistant at scale, now with ads, distribution, and platform economics. And then humans and other new labs is exploring kind of what comes after the current chat interface. So it's thinking about deeper collaboration and the difference between human AI relationships. And again, these are two very different camps. So it's basically monetize what's working today and fund in a big way exploration for kind of what might replace it tomorrow. So now let's talk briefly about Europe, because if you've not seen this week, there was a huge structural signal from the European side that founders and investors should not ignore. In her Davos address, the European Commission President, Ursula von der Leyen, talked about creating basically a brand new, or at least a truly European company structure. I've been following this from the sidelines for a little bit, called EU Inc., described as the 28th regime. And the idea really here is to reduce friction and kind of build companies very much quicker than they are in the EU, with a kind of single line of rules that across all member states, making it much, much easier to incorporate and build a new company. And this means also that Europe's basically start to think about scaling a company feeling less like a legal obstacle, a little bit similar to elsewhere in the world. And again, this is one to watch because, to be honest, this has dragged on for a little while, and now this huge announcement has made its stage here. So let's see what's coming more from Europe. All right, let's turn to markets. So I'm going to keep this to the investor lens, so not kind of talking just about prediction, but what prices might seem to be reacting to. So this week, it was reported that US markets were on track, basically, for a second weekly loss. So this week, US markets reported with another weekly loss after Intel took a hit. In the same coverage, actually, NVIDIA was slightly higher, but that was on reports that the Chinese tech giants have been cleared to buy some NVIDIA chips. Again, this is very brief, but the intention here is to talk about what does that mean in the world of AI. So the demand is real, but what's happening, especially there, and I think in the private sector, is there's punishment for lack of delivery and results. And then basically thinking about this from a perspective of the weeks on week loss, this is again a continuation. It's a slight run of caution, to be honest. And let's think about that as well for zooming out from last year. So around this time last year, the conversation was much more about let's build this AI stack and fund the infrastructure. And that's from like January 2025. So do you remember Stargate? I'm sure you do. But that was, of course, a big venture involving SoftBank, OpenAI, and Oracle, talking about this $500 billion in AI infrastructure. And of course, then this large-scale data center build-out, and we've seen that boom from here. So this is the kind of contrast I want you to think about. So Jan 25, big infrastructure narratives, huge capex ambitions in this kind of race to build. Now thinking about where we are in Jan 26, it's thinking about monetization of platform, incentive design, safety, segmentation, and lots of people asking where the ROI is. So it's kind of in a different phase, same sector. And what does this mean for you from a perspective of the markets? It really means that hard questions are no longer just technical. I think they're also about default. So what that means is who becomes the default model on a device. Think about that from last week. What incentives sit inside a recommendation? Another huge one. How safety and identity are enforced. And then also how quickly your organization can actually adapt when AI moves from a tool that you're using and choosing into a layer that you end up inheriting. If I leave you with one mindset this week, it's this: you don't need to track everything. It's really important. You do need to notice where decisions are being made on your behalf. And that's thinking about platforms by pricing models and incentives that are arriving very quietly. Because once these are default and they're set, they tend to stick. And that's going to impact you in thinking about what money you're raising, how you're building your company, and of course in enterprise where you're implementing. That's it for Without Boundaries this week. Thank you for taking the time. And if you've got a point of view from any of these, please send it over. I'm building a weekly briefing for people who basically don't have time to live in the feed. I'm ending up certainly over the last few weeks maximizing the amount of time that I'm spending to really about half an hour a day tops. And it's very hard, of course, to then stay on top of everything. So I'll be back next week. Thank you for listening.